Welcome to Market Brief After Hours. We have a massive show lined up today. The markets are riding a renewed wave of optimism, pushing major U.S. indices significantly higher. A lot of this upward momentum is coming from a sharp pullback in oil prices and another incredibly strong round of corporate earnings. We are seeing fresh record highs, shifting geopolitical landscapes, and some fascinating technical setups in the Forex markets. Let's dive straight into the numbers. How did the major U.S. indices close out the session?
It was an exceptionally strong day across the board, really highlighting a market leaning heavily on earnings strength. The Dow Jones Industrial Average rose by 356 points, which is a gain of 0.73%, to close at 49,298. The S&P 500 hit a fresh all-time record, gaining 0.81% to close at 7,259. And the Nasdaq Composite extended its own massive rally, climbing 1.03% to close at a record 25,326.
Those are some serious milestones, especially with the S&P 500 and Nasdaq hitting new records. What is the primary catalyst driving this broad-based risk appetite?
It really comes down to a combination of easing inflation fears and stellar corporate performance. Energy prices have been a massive headwind recently, but we saw a sharp drop in crude today. That immediately lifted equity valuations because it takes the pressure off inflation. On top of that, roughly 85% of companies that have reported earnings so far have actually exceeded expectations. When you have multiple industries delivering better than expected results, it reinforces a lot of confidence in the broader economic backdrop.
You mentioned the drop in energy prices. What exactly is happening in the oil markets right now to trigger that pullback?
Markets are feeling increasingly comfortable that the fragile ceasefire between the U.S. and Iran and the Persian Gulf is going to hold. Because of those reassurances, we saw immediate supply disruption fears evaporate. Brent crude fell 3.99% to $109.87 a barrel, and West Texas Intermediate dropped 3.9% to $102.27. That sharp retreat in oil is exactly what allowed the broader market valuations to expand today.
And I imagine that drop in oil is also rippling through the bond market?
Exactly. With oil dropping, the markets are reassessing the inflation outlook, which caused U.S. Treasury yields to ease. The 10-year yield fell to 4.426%, the 2-year yield eased to 3.9%, and the 30-year yield slipped to 4.993%.
Before we look overseas, let's touch on the domestic macroeconomic data. It sounds like the signals here in the U.S. are a bit mixed right now.
They are definitely mixed. On the trade front, U.S. exports rose 2.0% to a record $320.9 billion in March, mostly driven by energy shipments. However, the overall trade deficit widened because imports increased to $381.2 billion. Housing is also showing a divergence. New home sales jumped a very impressive 7.4% to 682,000, which beat expectations. But on the flip side, building permits fell 11.4% to their lowest level since August 2025. That suggests we might see some softness in construction activity down the road.
And what about the labor market and the services sector?
We are seeing signs of moderation there too. Job openings declined to 6.87 million in March. It's slightly above expectations, but it continues a gradual cooling trend we've been monitoring. Meanwhile, the ISM Services PMI came in at 53.6 for April. That is below forecasts. It means the services sector is still expanding, but the momentum is clearly slowing down.
Let's cross the Atlantic and look at Europe. How did the European markets react to the shifting energy landscape?
European equities finished broadly higher as investors balanced the easing oil prices against lingering regional risks. The Stoxx 600 rose nearly 0.7%. Looking at specific countries, Germany's DAX had a great session, advancing 1.71% to 24,402. France's CAC 40 gained 1.1% to 8,062, and Italy's FTSE MIB was the standout, surging 2.27% to 48,558. The notable exception was the UK, where the FTSE 100 actually fell 1.37% to 10,222.
Were there any specific economic reports out of Europe driving those individual country performances?
Yes, quite a few. In the UK, car sales jumped 24% year-on-year to over 149,000 units, mostly driven by fleet demand. In Switzerland, inflation accelerated to 0.6%, the highest level since December 2024, largely due to rising energy costs prior to today's pullback. And Spain delivered some fantastic news regarding its labor market. Unemployment fell by 62,700 to 2.357 million. That drops the figure below 2.4 million for the first time since 2008, which is being supported by record tourism inflows.
Fascinating contrast across the continent. Moving over to Asia, the picture looked a little less optimistic today.
Asia was generally mixed to lower. Hong Kong's Hang Seng Index fell 0.76% to 25,898, and that was despite some very strong economic data showing 5.9% GDP growth in the first quarter. Over in Australia, the S&P ASX 200 declined 0.19% to 8,680. That was a direct reaction to the Reserve Bank of Australia raising interest rates by 25 basis points to 4.35%. They specifically cited persistent inflation pressures linked to the Middle East conflict. New Zealand's NZX 50 also fell 0.47% to 13,035, reflecting a broader regional caution.
We are going to take a brief pause right here for a quick word from our sponsors. When we return, we will dive deep into the foreign exchange markets, look at the technical setups with key moving averages, and break down today's biggest individual stock movers. Stay with us. Welcome back to Market Brief After Hours. Let's pivot to the foreign exchange markets. There's a lot of technical maneuvering happening right now. Let's start with the euro. What is the setup for Euro USD?
Euro USD is currently trading sideways within a very tight range. It edged up just 0.03% to close at 1.1695. The price action is highly compressed within a dense cluster of key moving averages right now. The pair is hovering right between the 100-day simple moving average at 1.1708 and the 200-day SMA at 1.1675. It is also holding just above the 50-day SMA at 1.1643. So there's a real lack of directional conviction. If we see a sustained move above 1.1713, it opens the door toward 1.1800. But a break below 1.1675 could expose downside toward that 1.1643 support region.
And how is the British pound holding up against the dollar?
GBP USD is looking a bit more constructive. It rose 0.08% to settle at 1.3543. The price remains firmly above its key averages. The 50-day SMA at 1.3414, the 100-day SMA at 1.3473, and the 200-day SMA at 1.3416. This structure continues to show higher lows, which supports a bullish bias. If buyers can push it above 1.3578, we could see momentum build toward 1.3650.
What about the commodity currencies? How is the Australian dollar reacting?
Australian USD extended its advance, gaining 0.23% to close at 0.7182. It is maintaining a well-defined bullish structure, trading comfortably above the 50-day SMA at 0.7064, the 100-day at 0.7955, and the 200-day at 0.6747. It is consolidating right near the 0.7200 psychological barrier. A break above today's high of 0.7197 would likely extend those gains towards 0.7250.
Let's look at the Japanese yen pairs. We've seen some intense volatility there lately.
Absolutely. USD JPY advanced 0.41% to close at 157.86. It rebounded after testing support near the 100-day SMA, which sits at 157.29. It's currently sitting below the 50-day SMA at 158.65, but well above the 200-day SMA at 154.10. It's trying to recover from a sharp corrective move. Meanwhile, NZD JPY rebounded sharply, climbing 0.72% to 92.95. Buyers really regained control there, pushing the price back above the 50-day SMA at 92.88 and the 100-day SMA at 92.35, all while being supported by the rising 200-day SMA at 89.93.
Before we leave the technical charts, let's touch on gold and Bitcoin.
Gold found some support today, rising 0.77% to close at $4,555. However, it remains in a medium-term correction, trading below both the 50-day SMA at 48.08 and the 100-day SMA at 47.55. The longer-term trend is still underpinned by the 200-day SMA, way down at 42.69. Over in crypto, Bitcoin rose 1.9% to $81,430. It's holding strong above the $81,000 mark. The $74,400 zone has officially flipped from resistance into support. Interestingly, this comes as MicroStrategy reported a massive $12.54 billion first-quarter net loss, despite aggressively increasing its Bitcoin holdings to 818,334 BTC.
Let's wrap up today's session by looking at the individual market movers. Who were the standout stocks today?
The biggest story was in the semiconductor space. Intel surged more than 12% today. This was driven by reports that Apple has explored using both Intel and Samsung for US-based chip production. That news lifted the entire AI infrastructure sector. Micron, SanDisk, and Qualcomm all gained over 10% on the day.
That is a massive shift for the domestic chip manufacturing narrative. Who else made headlines?
Pinterest had a phenomenal day, surging over 8%. They reported first-quarter revenue of $1.01 billion, which comfortably beat the market consensus of $965.7 million. On the downside, PayPal slid 7%. Management indicated it might take several months to fully define their future strategy, and the market clearly did not like that lack of near-term visibility. Finally, Aptiv tumbled 7% after the company significantly slashed its full-year net sales guidance down to a range of $12.80 billion to $13.20 billion.
It sounds like the market is highly sensitive to forward guidance right now, rewarding the beats and severely punishing any uncertainty.
That is the perfect way to summarize it. The market is increasingly driven by fundamentals rather than just headlines. The sharp retreat in oil removed a massive pressure point today, allowing valuations to breathe. But the backdrop isn't without risk. Lingering geopolitical tensions and mixed economic data could easily shift sentiment if things deteriorate. But for today, the ability of equities to sustain these record levels shows a deep confidence in corporate performance.
A great perspective to close out the day. Thank you to everyone tuning in to today's breakdown of the markets, the technical levels, and the economic data shaping the week. If you find this useful, please follow Market Brief after hours.